So we are living through a time when global wars are returning in much more frequency, but also magnitude. And therefore, that has a huge implication for the global economy, for the macroeconomic uncertainty that surrounds everything, including gold, including precious metals, critical minerals, oil, but of everything that we take for granted. And well, I wanted to understand what's been going on with gold recently, because we often talk about the geopolitics, but it's crucial we bring in the geoeconomics as well. And someone who I thought would be of great interest to hear from is Florian Grummes, who is a independent financial analyst, investor, trader, and consultant with over 30 years of experience. He's also the founder and managing director of Midas Touch Consulting, where he looks at precious metals, mining stocks, crypto, and the broader macroeconomic trends. So, Florian, welcome to the show. There's quite a lot happening right now between the war in Ukraine, the war in Iran, but of course the Chinese and American strategic competition. So just to sort of set the stage, what are you looking at and how are you feeling about the geopolitical climate?
Yeah, first of all, thanks for having me. Good to be on your show here. Of course, like always, it's a complex picture, lots of things happening at the same time. Speaking about gold, I think the most important takeaway before we dig deeper into geopolitics here is that people need to understand that we had this massive run up over the last 2.5, 3 years, basically. And by end of January, gold and silver had simply become extremely overbought. And hence what we are seeing since then, the last 4 months, is a healthy, totally normal correction, a pullback, a healthy breather, if you want, because it was just extreme euphoria that we have seen end of January. And so I think that's the most important part of understanding what's going on with the gold price right now. But of course, in the background, lots of things happening. On the physical side, on maybe a rotation in terms of where are the more important marketplaces now. And of course, geopolitics, especially the start of the Iran crisis or the Iran war, end of February, created quite a bit of a selling pressure in March. And so far, gold has not really been able to recover from that. So that's
it strikes me, Florian, that we're seeing a real uncharacteristic shift in gold. We've had quite a few investors and economic minded people on the show before, including Frank Justra, who's a very popular name in the world of gold and broader metals. And from the time that I've spoken with him, you know, what we're seeing right now, especially since February 28th and the whole war with Iran, gold, what's going on with gold right now? But we can go into platinum, we can go into silver and other precious metals, but I'm just quite interested in gold from your perspective in the past few months.
Well, again, I think it's important to understand that we had a regime change within the commodity sector, if you want. So since end of February, oil is dominating the markets. If there's been rockets and drones and escalation in the Middle East, oil price went up and gold went down. And one explanation is, of course, that we've seen, for example, the Central Bank of Turkey. Recent news were that the Russians had to sell some of their gold, most likely some of the GCC countries, maybe the Emiratis, maybe the Saudis, maybe the Kuwaitis, had to sell some of their gold because, of course, this whole crisis here has created dramatic economic pressure, and they simply need to have liquidity to keep their economies running. So that was one of the reasons. Then also Dubai is still, but used to be a very important hub for the gold, the physical gold trade, especially for the gold that was coming from Africa. Dubai has a very strong refinery industry here, and I think 20 to 30% of the global physical gold went through Dubai until the start of the Iran crisis. And what we have seen since then is that some of the traders, the merchants, have basically shifted towards Hong Kong because, it's simply the instability here. I mean, the airport was closed just a few days after the first drones. Local traders were stuck with their positions. Many of them act as intermediaries, basically for the African gold trade. So they make maybe 1% or 2% on the whole trade. But they have the physical gold here in Dubai, and suddenly were forced to pay much higher fees for insurance, for storage, and they couldn't move the metal. And of course, this is a very simple reason that you might not think about before such a crisis, and then suddenly it hits hard. So that was one of the reasons why suddenly gold was being traded 20, 30, even $50 below spot in the first few days after the start of the war. And then we had this whole risk-off kind of movement. And since then, yeah, gold is still caught in that correction.
Well, if I may, Florian, just on that point, because wars have traditionally been bullish for gold, right? But it seems like today's conflicts are changing that relationship between gold and risk as a bastion of security in a place that assets and money wealth goes to when everything else is unsure, right? It seems like gold isn't holding that nature right now.
Yeah, it might not make sense on the first look at it, that in times of crisis you would expect gold to do really well. And what gold actually has always been doing in history, it's really good in sniffing out these geopolitical troubles, and it's very early realizing there might be a war around the corner. But when actually the rockets are flying, usually gold is selling off. We've seen that at the start of the Russian invasion into Ukraine as well. In the weeks before that, gold had a strong run up. I think it went to 2075, and then once the invasion indeed happened, gold started to sell off. So that is somehow a characteristic, because of course immediately if you have a war situation, uncertainty skyrockets, people holding back, entrepreneurs, companies calculating, maybe we do less business, maybe we don't have enough liquidity on the sidelines to invest, maybe better to just risk off. And in that sense, that hits also gold. And again, like I said in the beginning, I think the gold went into this whole situation in an overbought fashion. If it would have been the contrary and it would have been totally oversold, I don't think that correction that we're seeing now would have been so severe. But we had a strong rally for 2.5, 3 years. So this needs to be digested. And then you have these geopolitical events as a trigger, basically.
Well, are we witnessing a new era where gold is becoming a geopolitical asset, therefore, rather than a safe haven?
Yes. So I'm referring right now more to the price, right? To the price action of the last few months. But in the bigger picture, you are absolutely right. I think we're seeing the remonetization of gold. It's moving back center stage here. It has become the most important reserve asset in central bank balance sheets. And it is, when you simply look at the market cap, the largest asset on this planet. And I think that will intensify over the next few years. So I'm not worried about the secular bull market. I think at some point this correction will find an end, and then you're going to see new all-time highs, probably within the next few months, maybe within the next 1-2 years maximum. Because all the issues that have created that war are not from the table. They're not off the table. You see that the Chinese continue to have the need to diversify out of the US dollar, away from assets that can be confiscated. The same is true for the Indians, the Pakistani, many of the GCC countries here. Even Poland has been ramping up their gold holdings in the central bank. This will continue. And given the extreme debt levels in America, and given the fact that this war has basically wasted billions and will continue to waste billions, the Americans will have to continue to create more debt, and that will weaken the dollar in the sense that people all over the world looking for something that is stable, outside the reach of America, and basically neutral, politically speaking, neutral. And gold exactly is that, and has always been.
So I want to come more to de-dollarization and central banks in a moment, but just on the political and gold relationship, because I think what we're seeing right now is a proliferation of podcasts that cover sort of geopolitics, just because geopolitics seems like the buzzword of the moment, right? Everyone sort of has a political opinion, and they're like, oh, geopolitics is relatively easy to talk about. I'll just start a podcast. But what I think we try to do differently on this show is bring in some of the economics, so bring in the maths, bring in the substantive materialistic elements, because you have to have a proper education in finance or economics to understand how that weaves into the geopolitical calculus as well. At least that's what I try to do with my background. But what I'm going with this is simply, how does the growing fragmentation of the geopolitical system, of the global financial system, because of geopolitics, affect gold's role?
Yeah, I mean, it's becoming more and more important. The Chinese basically have a strategy since 20 years. They're ramping up not only their gold holdings, they also have become the largest gold producer on the planet, meaning they have the most gold production. And it's been said for years and years already that nearly not 1 ounce of gold and silver is leaving the country. We have seen the Russians stacking up gold since 20 years already. They publish it every month, the central bank gold holding in Russia. And yeah, I mean, we have this, of course, this East-West, China against America situation. America and the US dollar have dominated for the last 60, 70 years, basically, especially since Bretton Woods. And of course, since the end of the gold standard in 1971, we are living in a confetti party, right? I mean, this is backed by nothing than the trust of the people into the fiat money system, and by the force of the state, which is primarily the force of America and their strong army. They are perceived as still the strongest military on the planet. But you've seen the Chinese demonstrating last year. They had a big military show where they presented weapons. We've seen the use of weapons now in this Iran crisis that we have not seen before in the West. I think Trump totally underestimated how Iran would retaliate. And yeah, this is all questioning the dollar, and this will continue. I think this is a process that is not being done in a few days, weeks, or months. This will take probably a decade or even longer until we really understand the tectonic shift here. But it's happening, and again, I mean, gold always has been the last reserve asset, so to speak, a neutral one. And I think this is going to happen again. I mean, we are right into that. How quickly? Again, I think it will take probably another decade until we really understand what's going on here.
Well, the weaponization of the dollar is something that a lot of global South countries, a lot of countries from the non-West or whatever non-aligned groups, shall we call it, are most critical of. But as far as I can see, what replaces the dollar right now? I'll put this to you as a sort of two-pronged question. But on the one hand, people argue about the efficacy of BRICS. BRICS is coming, and the Russian and the Chinese and Indians and everyone else are going to develop their own currency that is backed by gold, right? Based on gold. I have a lot of skepticism because of the internal fractures of the BRICS countries. But the other thing is just sort of for the US dollar to be replaced or usurped as the reserve currency, that's going to be the Chinese renminbi. But that requires them to have an open capital account. It requires quite a significant shift in the macroeconomic policy of China. So can you explain how you see these things?
Yeah, I agree with you. I don't think BRICS will really come up with something. I think it's too complicated. It's too many different countries. But they are working on something gold-backed, so to speak. I mean, the Chinese have already, or let's say the Shanghai Gold Exchange has opened up vaults in various countries already. The Saudis, for example, are able now to trade with the Chinese, sell them their oil for renminbis, and they get the renminbis in their own country, and they can go to the vault from the Shanghai Gold Exchange in Saudi and cash in their renminbis for physical gold. That's been something that the Chinese have been working on for the last 2 years, or even 3 years. And that's one way I think this whole thing moves forward, because as you rightly said, nobody in the West wants to own renminbi. And even in the global south, many are still skeptical. So the Chinese need to inject confidence into their fiat currency, and hence that's why they betting on gold and have created this super strong, very important physical market with the Shanghai Gold Exchange, and now are in the process of setting up a second very important market in Hong Kong. I think that's the main strategy. And look, I mean, I'm now 25 years in the gold market. Of course, we've been speaking about China 25 years ago already, but only now in the last 3-4 years have we seen that this physical demand via Shanghai especially has really changed the gold market, because until then, the paper shenanigans in the West, where they have been trading 150, 200 paper ounces of gold to figure out the price for 1 real ounce of gold, right? They have been still in control. And over the last 3 years, we have seen that they basically have lost more and more control. They might be able to create a waterfall sell-off in an afternoon, but they're not able anymore to suppress price for a few months or even 1 or 2 years. So that has changed significantly. And again, I think that was a very smart move by the Chinese to really focus on the physical gold. And they didn't pick Bitcoin. They didn't pick anything else. They simply picked the old-fashioned gold. And that's still, I believe, the best form of money that mankind has figured out so far. And for the foreseeable future, I think that will be like this. So gold is simply coming back into the system and receiving now the attention it deserves.
Yeah, I suppose as I say, I've vacillated on the potential of BRICS, mainly just because, on the one hand, we shouldn't ever deny that things change, but equally it's been very overhyped, and yes, the sort of imminency of it about to be the US-led order to be destroyed or dismantled or severely diminished is, it can happen. But I'm just...
Yeah, we should not forget, I mean, the Americans still have the deepest, most liquid capital markets, right? And they also still have the strongest army on the planet, most likely. And so this takes time. This is like all these talks about BRICS, it always sounded like, it's just another few months and then they take over. No, I think this will take a decade or two, and then we have to really see if it's going to be the BRICS or if it's China alone or a combination of China and Russia. I think the Chinese are very smart. I mean, they're playing the long game. That's nothing new. All right, they've been planning this for many, many years, if not for many decades. They are waiting. They are also now in this Iran crisis. They've been rather waiting patiently, letting the Americans do all the mistakes. And when Trump went to China 2 or 3 weeks ago, he came back as a lame duck. I mean, it was pretty clear that things are changing. But again, for the markets to accept this and to change the perception of it, apparently takes much longer, because right now the narrative in the general financial markets is still, we're right in the middle of an AI bubble. We're seeing parabolic rises in the semiconductor stocks, in the AI stocks. We are going to see one of the largest IPOs ever in a few weeks, SpaceX, crazy valuations. And people are ignoring the fact that actually there's no more or not enough oil, most likely around the corner in a few weeks, because inventories are extremely low. You see in Asia already reduced work weeks and rationings going on. It's a very interesting situation right now. And I think the market's still hanging on to these narratives, while slowly but surely the physical reality is kicking in. And as I said before, I think oil is right now the dominating market. That's the king at the moment. We had this regime change from gold to oil. And within a commodity super cycle, that's totally normal that you see within these different sectors regime changes. And I think for the foreseeable future, it will be oil dictating now where we are going. Well, and then once money printing kicks in again, I think then gold will come back.
Do you think we'll see a flip back, so to speak? Someone's written in the comments, which I thought was worth bringing in, though, like it would require a significant collapse of SWIFT being trusted, and also the collapse of the Nixon sort of based US petrodollar. But can you argue that we're sort of seeing that the extent to the damage that the United States or the Trump administration is having, not only on the US economy or or oil prices and stuff, but the confidence of the Gulf states in the petrodollar system? Not something that the Chinese are going to come in and become the yuan system, but like clearly we are seeing a structural undermining of the petrodollar system. So
exactly, I mean, that's what's going on. We have seen here the Emirati crown prince had to come to China a few weeks ago. I think he's been clearly told what to do and what not to do. We're also seeing that the Saudis, the Qataris, I think, the Kuwaitis, and also the Emiratis reducing their US dollar holdings, especially their US Treasury holdings. That's been the news just a few days ago, because they realized, I mean, they expected America to protect them. And what America actually did was created a war zone here, right? Nobody wants to speak openly about it. So there was one local real estate mogul immediately after a few days writing on Twitter, like, how dare you, Mr. Trump, creating a war zone here in the Middle East? And then he had to delete his tweet just 2 days later. But actually, that's what's going on here. I think the perception of America being the protector has diminished severely. And at the same time, the Chinese have been working on all diplomatic channels. They had brokered this kind of like peace and agreement between Saudi and Pakistan already a few years ago. And I think that's the way forward for the Chinese, and they will step by step become a more important player here in the region. But this petrodollar doesn't end overnight. I think this is, again, it's a process, and it might take a decade or something. America is heavily in debt. They need the petrodollar to run their system, basically.
How sustainable is that, though? What is the relationship with the US dollar right now? How sustainable is it for the US to run such a deficit and the national debt? You know?
Well, I mean, if people hold with dollar bonds, so to speak, and Americans are the ones who can create the dollar, theoretically they could continue forever. But the dollar is losing purchasing power against hard assets, not so much maybe against other fiat currencies, but against hard assets. And look, I mean, gold now trading around 4,450, oil trading around $100. If you go back 2-3 years, you can see the dollar has lost tremendously in purchasing power against hard assets, right? While maybe against the euro, for example, it has been a rather stable, small range where the currencies trade against each other. So that's the real story. I assume we are in a commodity super cycle. We have seen gold running up for the first 2-3 years. Now oil has been taken over. I think, if you go to the grocery store, it's not a surprise. Everything's up. Your espresso probably costs 5 times what you paid before COVID. And this will continue. And next in the row is probably agriculture, and because of all the fertilizers and all the problems that come from the fact that there's not enough oil for all these derivatives of oil anymore. So yeah, we are in a commodity super cycle, and it's going to be very interesting how this is playing out. We also have to clearly say that, nations are now fighting for resources and materials, right? I mean, that's also something we're seeing.
I was going to ask you that. So you think we are in a resource war era?
Yeah, of course. I mean, there's a huge competition. What's driving right now this demand, or has been driving over the last 1 or 2 years, of course, is this huge competition between America and China in terms of who is first in AI, who's building all the data centers, who has enough electricity, who can basically run that digital future, right? And since 2 sides on the planet doing exactly the same thing, this is very inflationary because it's a duplication, right? They're not working together anymore. But I think globalization it has ended, and now they're competing with each other, trying to duplicate and build it better than the other one, which creates huge demands for all the materials. And we have now, since the beginning of the internet age, let's say 30 years ago. We've been conditioned now to believe that digital is everything and you can basically live as a digital nomad, and most of the content is now being created digitally. But there's always a physical reality, and this has been completely ignored over the last 10, 20 years, especially in the West. And there was no investment in oil, very little investment in mining, while China has slowly but surely more or less conquered Africa in terms of they have made deals with many countries. They have helped and financed many constructions, infrastructure over there. And they also have secured mining rights and oil and gas rights, right? And so the West has been very late in understanding this. I mean, that's at least something that Trump, I think, achieved, that the West is now woken up and they are aware that there is an issue. If, for example, speaking of rare earth, I mean, if you want to build a weapon nowadays in the Western countries, you basically have to call China because we don't have enough in the West, right? And that is, of course, not a very good setup if you want to compete with the Chinese going forward. So I'm not sure if it's too late. I think on if you just look on what's going on and also the speed of how things evolve, I think it's pretty clear that the Chinese at some point will take over. Whether we like it or not, and whether this will be good for us or not, this is another topic, right? But they've been very smart in securing hard assets. They have a long-term strategy. In the West, it's always every 4 or 5 years we vote and then a new party, and we lose so much energy just by fighting among us while not having any strategy going forward, basically. And you can see, for example, Chinese EV cars. I mean, they're taking over.
Well, we can see we can certainly see the influx and absolute domination of the Chinese EV markets. I think they've grown to being the 6th or 7th largest car manufacturer in the world now. It's insane, the growth of various Chinese industries, but especially EVs. I guess, Florian, one of my last questions really is sort of, what part or which part of the precious metals sector to you looks the most attractive today, which is the least uncertain given the volatility between the US and China and all that implication?
Well, uncertain, I think, is everything, but I really like platinum because, first of all, there's just 2 countries who are basically producing platinum, which is Russia and South Africa. Russia had to sell some of their platinum holdings because they needed the money for the Ukraine war. But this is the only serious producer, while the other one is South Africa. As you know, it's a very challenging situation over there, very unstable electricity supply. The whole society is in a very challenging setup. So these are the 2 main producers, and we need platinum for many things. I think if I remember correctly, when I started in precious metals, platinum used to be double the price of gold. So here we are, it's trading way below a price of 1 ounce of gold currently. So I think in the next run up in this precious metals secular bull market over the next few years, I think platinum will catch up. So that's probably the most interesting one. It's a niche market. It's not as big, of course, as gold and silver, but I think that's very interesting. And from the fundamental perspective, of course, I mean, silver is the metal for the digital future. The only thing why I didn't pick silver right now is that we had this crazy run up. It went from April last year until end of January, it went up 330%. Usually silver is coming rather late to a party in the precious metal sector, and once it shows up, it's also the party crusher. So you have this crazy rally, and then it takes quite a while until it basically gets back on its feet. So I think the consolidation correction in silver will take probably a little bit longer, and hence that's why I'm a little bit more moderate here and prefer platinum.
Interesting. Yeah, I've had increasingly strong feelings about platinum and silver. It's not investment advice, anyone. My last question simply, Florian, is what would you encourage people to watch then, aside from platinum, just more broadly, like the geopolitical risk and economic playoffs here?
Yeah, I think, I mean, right now you just have to watch the oil price basically, and you don't need to read the news necessarily. So I think that this oil rally is not over. Quite the contrary. I think the inventories are so low now that you can get at any time crazy price spikes. And it's also fascinating to see that we are in a clear bullish trend here in oil, but people hating it. Nobody speaks about it. It's very hard to find a real oil bull. People are aware of it, but most people are not invested. Most people playing the AI tech boom, hoping and believing that this digital future will basically unfold. But I think it's more molecules than code going forward. So I'm still very much focused on oil currently.
Very good. Well, there you have it, guys. Focus on oil, consider platinum, worry about gold or ponder about gold, and everything else in between. But Florian Grummes, independent analyst and investor, thank you so much for your time. All of you watching, do check out Florian's work, and we'll see you all in the next live stream, in the next video. Be sure to subscribe, like the video. Take care.
Thanks.